Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 24th, 2025, and we're diving into CBRE's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss CBRE's performance, especially given the strong start they've had this year.
Revenue and profitability overview. Let's start with the top line. CBRE reported a revenue of $8.9 billion for Q1 2025, which is a 12% increase compared to last year. John, can you elaborate on this growth?
Absolutely. The revenue growth is impressive, driven by a 15% increase in net revenue to $5.1 billion. This indicates strong performance across their business segments, particularly in their resilient and transactional businesses. The core EPS also saw a 10% increase to 86 cents, surpassing the analyst forecast of 81.
And what about their profitability?
CBRE's GAAP EPS rose by 32% to 54, and their core EBITDA increased by 27% to $540 million. This reflects their effective cost management and operational efficiencies.
Segment performance and strategic initiatives. CBRE has restructured its business segments. Can you tell us more about their performance and strategic initiatives?
Sure, CBRE introduced two new segments, Building Operations and Experience and Project Management. The Advisory Services segment reported a revenue of $1.7 billion, while the BOE segment generated $5.4 billion. Project Management also performed well with $1.6 billion in revenue. These changes align with their strategic acquisitions, like Industrious, to enhance their service offerings.
How do these segments contribute to CBRE's overall strategy?
These segments are crucial for CBRE's growth strategy, focusing on expanding their service capabilities and capturing more market share in the real estate services industry.
Cash flow and shareholder returns. Let's talk about cash flow and shareholder returns. How did CBRE perform in these areas?
CBRE reported a robust free cash flow of nearly $1.5 billion on a trailing 12-month basis. They also repurchased $600 million worth of shares, demonstrating their commitment to returning value to shareholders. Their net cash flow from operations was over $1.6 billion, and they maintained strong liquidity with $3.5 billion available.
What does this mean for investors?
It indicates a strong financial position, allowing CBRE to invest in growth opportunities while also rewarding shareholders through buybacks.
Market outlook and leadership commentary. John, what is CBRE's outlook for the rest of the year, and what did the leadership have to say?
CEO Bob Sulentic mentioned that CBRE had a strong start to 2025, with most businesses performing better than expected. However, he noted some uncertainty due to the tariff situation. Despite this, CBRE's strategic positioning and strong new business pipelines suggest resilient growth prospects.
How should investors interpret this outlook?
Investors should be cautiously optimistic. While there are external uncertainties, CBRE's strong fundamentals and strategic initiatives position them well for sustained growth.
Key takeaways. In summary, CBRE has delivered a strong performance in Q1 2025 with significant revenue growth and profitability improvements. Their strategic initiatives and shareholder returns are noteworthy. Thank you, John, for your insights.
Thank you for having me. It's been a pleasure discussing CBRE's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on CBRE's performance in the comments below.